Hello everyone, we are group number 7 and we have selected the FMCG industry for the industry analysis. Now let us take a brief look into what is FMCG industry all about. Well, the FMCG industry is the fourth largest industry of the Indian economy. The market size of this industry is about $120 billion. The industry has tripled in size over the last 10 years. The major companies in this industry are ITC, HUL, Marico, Patanjali, Dabur, and many more. FMCGs have a very low profit margins and high volume sales. FMCGs account for more than half of all consumer spending. Now let us understand the pestle analysis of the FMCG industry. The first factor that we take into consideration is the political factors, which include political stability, taxation policies, trading policies. Uh, the second factor is economic factors, which includes interest rates, national income, economic growth, and inflation rate. These factors influence the company's decisions about the products that they're distributing. The third factor is the social factor, which includes demographics, changes in lifestyle, consumerism, which are taken into account while taking various strategic decisions by the company. The fourth factor is technological factor, which includes advancement in technologies, automation, research and development. The fifth factor is the environmental factors, which includes ecological factors, environmental issues, and environmental regulations. The final sixth factor is the legal factor, which includes consumer protection, industry specific regulations, and employment law. Now, my colleague will take forward with the SWOT analysis of FMCG industry.
Now we will do the SWOT analysis of FMCG industry. Starting with the strengths, it has low operational cost. There is a presence of established distribution network in both urban and rural areas. There is presence of well-known brands in the FMCG sectors like HUL, ITC, Nestle, Marico, etc. And they take care of a deep roots of local culture and great understanding of consumer needs. Now coming to the weaknesses, there is a lower scope of investing in the technology and achieving economies of scale, especially in the smaller sector, because consumer preference and their demands differ with the time. There is a low export level because India has such a huge demand, so we prefer to consume ourselves rather than export. There are counterfeit products in the rural market, and there are many alternatives. Therefore, rural market is still untapped. Coming to opportunities, as we have already know, the rural market is not tapped like the urban market because there is a huge presence of brands in the urban market rather than rural one. Because of rising income level, we know that there is increasing purchasing power of consumers with time. Also, large domestic market like India's population is more than 1.3 billion, so we know that there is a huge market to capture. Also, it has a very huge growth export potential and high consumer good spending. Lastly, coming to the threats, with the removal of import restriction, it replaces the domestic brand. So if we decreases the custom duties on the imported products, then there is huge competition with Indian FMCG brands. Also, there can be slowdown in the rural demand, and because of tax and regulatory structure, there can be lower demand of domestic FMCG goods. Now my colleague.
Okay. Hi everyone. We are here to talk about the BCG matrix of HUL and ITC. First, let's see how the BCG matrix is constructed and what are the four main components. So the first one is cash cows. The BCG matrix is divided into four according to the growth rate and market share of the products. The first one is cash cows. Cash cows are low on growth rate and high on market share. These are the products that a company uses to generate cash for their star products and their question mark products. The dogs are the products which are low on growth rate as well as low on market share. The company tries not to focus much on these kind of products as they do not generate value. The third is the star products, which are the best products of a company. They are high in growth rate as well as in the market share. And the last one are the question mark products, which are high in growth rate and low in market share. These are the kind of products that the company focuses on more so that they can transfer from question mark to the star products. For HUL, their cash cow products are Clinic Plus, Sunsilk, Vaseline, and Red Label. Their dog products are Taza, Brookpoint, and Brew. Their star products are Lakme, High, Vim, Feel, etc. Their question mark products are Close Up, Pepsodent, Fair and Lovely, and more. Let's come to ITC. For ITC, the industry of cigarettes and cigars that they are dealing in are their cash cows. The information technology industry for them is the dog product. The star products are paper boats, paper and packaging, agribusiness, and hotels. And the question mark products are foods, which is basically the FMCG industry. Now let's talk about the diversification strategies of both the companies. For HUL focuses on four main principles for diversification. The first is higher growth. Sustainability provides innovation opportunities, opens up new markets, and allows HUL's brands to attract consumers in new ways. Lower costs. By lowering waste and using resources wisely, HUL creates efficiencies, rationalizes costs, and enhances margins while becoming less exposed to the volatility of input prices. Less risk. Operating sustainably helps HUL future proof their supply chain against climate change. More trust. Placing sustainability at the heart of the business model strengthens relationships. Talking about ITC, let's first look at the history, how it began their diversification. So ITC began diversifying its business in the early 1970s, first into hotels and then into paperboard. ITC was the first company to mass produce cigarettes. The cigarette brand was what they started with. It began the marketing of cigarettes in 1911 by opening stalls at the Delhi Darbar, which was held to celebrate the shift of British India's capital from Calcutta to New Delhi. Businesses such as hotels and paperboards, which were earlier separate companies and are now divisions within ITC, have expanded in size and scale too. The paper and paperboard business has transformed from being a struggling subsidiary to a thriving division, accounting for nearly a sixth of ITC's revenue. Then there is the e-Chopal model, which has recently been initiated in 2000, possibly the only new business that has evolved into its third avatar, although its success has been limited. So that's it about the diversification strategies. Now I would like to hand over to my teammate for further discussion.
Hello everyone. Now coming to the Porter's five forces. So basically Porter's five forces determines company's competitive environment. So basically these five forces are: first is threat of new entrants. Threat of new entrants shows us how easy for a new player it is to enter into the industry. So basically coming to the FMCG industry, the threat of new entrant is low to medium because it is very difficult for the new entrant to compete with the well-established companies, because in FMCG the distribution channel is very significantly important. So it is difficult for the new entrant to compete with the well-established firms. Next is power of buyers. So bargaining power of buyers is a big threat in FMCG industry because there are many substitutes available, and then there is not much product differentiations into the product. So power of buyers is significantly high in FMCG industry. Next is threat of substitute. Same as power of bias, threat of substitute is also high in FMCG industry because there is not much brand loyalty of customers in FMCG industry because there are very similar product available and there are huge product line available in the FMCG industry. Next is power of suppliers. Power of suppliers, the threat of power of suppliers is low in FMCG industry because there are many suppliers available for the same raw materials in FMCG industry. So it is not a significant threat. Next is competitive rivalry. The competitive rivalry in FMCG industry is significantly very high because there are many competitors available in the market of the same size, of higher size, and also the foreign companies are also there in the Indian market. So the competition is significantly high. Next is the corporate strategies of HUL. So HUL is focusing on e-commerce and modern trade channels, which it considers as channel of the future. HUL is evolving to adapt to the trends by embedding technological across its end-to-end value chain to build a business which is future fit. They are focusing on building online shelves on the e-commerce platforms with winning point of sales communication. They are digitizing our route to market and having a strong presence in the growth channels such as modern trade and e-commerce. They pick up consumer signals real time through the People Data Center, which analyzes consumer sentiments and conversations about the brands and categories.
Thank you to my colleague. So now we will be talking about corporate strategies implemented by ITC. So without delaying, let's begin with the first one. It creates multiple drivers of growth by developing a portfolio of world-class businesses that best matches organizational capability with opportunities in domestic as well as export markets. They continue to focus on the chosen portfolio of FMCG, hotels, paper boards and packaging, agribusiness, and information technology. They benchmark the health of each businesses comprehensively across the criteria of market standing, profitability, and internal vitality. They always ensure that each of its business is world-class and international competitive in the market. They enhance the competitive power of the portfolio through synergies derived by blending the diverse skills and capabilities residing in ITC's various businesses to continuously grow in the future market so that they stay updated with the new trends to grow continuously. Now we will be talking about competitive advantage in FMCG industry. As we know, the market of FMCG is quite wide, diverse, and full of competition. A product with high turnover and low prices falls under the category of FMCG. Such products have a small shelf life. Earlier, companies were concentrating on big cities and metro cities for selling their products, and their marketing plans were designed to suit the taste of urban people only. But now, as we in the current market, as we move forward with the globalization across the whole world, the FMCG market has a lot more potential in the rural market as well. So the market of FMCG has become very competitive nowadays as they try to untap new markets. Companies plan competitive strategies in order to attract and connect to potential customers. The main competitive strategies they use are cost leadership strategies and differentiation strategy. But there is no single strategy that can define success. Different FMCG companies follow different strategies to attract customers. But generally, FMCG companies follow cost leadership strategy to grow forward in the business. Now my colleague will take this forward.
So our next topic is e-commerce role in expansion of FMCG industry. So in this, over the past 2 decades, the FMCG, that is fast moving consumer goods sector in India has witnessed a remarkable transformation, especially in terms of adopting online sales across different categories. Digital innovation and growth of e-commerce have led to the emergence of several new players in the market who are giving stiff competition to the existing players, and all these players are expected to contribute to more sales for the FMCG sector over the coming years. These players include Big Basket, Blinkit, Instamart, JioMart, Amazon, Dunzo, Zepto, etc. With the e-commerce encouraging a direct-to-customer model, FMCG business are benefiting in different ways, such as better monitoring, quick reach out to customers, and finally building trust. And our next topic is merger and acquisition of the companies, which includes ITC and HUL. So ITC merger and acquisition includes the companies like Sunrise Foods, Techno Agri, Sciences, Be Natural, Shah to Shah. And in HUL, merger and acquisition of the companies include GSK CH India, Aditya Milk, Kimberly Clark Level Limited, Indulekha Marine Exports. So this is it for the group 7. Thank you so much, sir.